Podcast Network Asia.
You are listening to First Metro Securities Philippine Stock Market Weekly podcast, where we feature timely and relevant discussions on the Philippine stock market and the economy in the hope of providing you investing and trading guidance.
You are listening to Philippine Stock Market Weekly's Market Bites, our mini-series which strives to deliver trading and investing analysis built on our research reports. For in-depth information, you may also log in to your FirstMetroSec account and head to the Research tab.
Hi everyone, I'm Joan and I cover the consumer sector for First Metro Securities Research. In this episode, I will discuss our latest company update for Wilcon Depot Incorporated. For our updated Wilcon report entitled Normalizing Growth Ain't a Bad Thing, we maintained our buy call for Wilcon but with a slightly lower target price of 30.10 pesos from the prior 31.50 pesos. For last year, 2022, Wilcon was able to deliver earnings ahead of our expectations given the factors that we mentioned in our previous podcast. These factors were the front-loading of purchases and anticipation of the price increases, supply availability, and the tail end of their opening, which helped drive the strong sales performance of Wilcon. And moving forward, we only slightly tweaked our forecasts in our model. They still remain largely intact, and we expect earnings to grow by 12% in 2023, this year, and 16% in 2024, next year. So our assumptions for our model are the following. First, low single-digit SSSG or same-store sales growth. This is in line with the management's guidance of low to mid-single digit this year. Aside from the high base from last year, we are also concerned with the persistent inflation eating into the real purchasing power of households, as well as its impact on the wallet share for home improvement expenses. So consumers would likely prioritize consumption of basic goods and services in the next 12 months as they look for savings to stretch their budget. Second assumption, we had marginal downward adjustment to our net selling area NSA growth expectations. We do think that Wilcon can reach its 100-store network target as early as the first quarter of 2025, but we expect that the new stores may take up smaller space as Wilcon ventures into second and third-tier cities and neighborhoods. And then lastly, higher gross margins on favorable product mix. For context, the contribution of the in-house and exclusive brands was 51.1% in 2022 last year, and we think that margins will remain sticky given the continued downtrading trends and margin windfall from Wilcon's high inventory cover. So given this, we expect that the in-house and exclusive brands will be able to contribute 52% to Wilcon's sales mix by 2024 next year. So again, for our assumptions, low single-digit SSSG, marginal downward adjustment to our net selling area NSA growth expectations, and higher gross margins on favorable product mix. We also highlight that the investment positives for Wilcon remain intact. We continue to like Wilcon given its structural demand drivers such as housing backlog, continued remittance inflows, and overall rise in household incomes. More importantly also, Wilcon's strong free cash flow generation and zero leverage give us confidence on the company's continued profitability and growth, especially given the current high interest rate environment. However, at this juncture, we highlight the key risks that can result to a slower growth for Wilcon going forward. First is the front-loading gains post-COVID reopening. Prolonged stays at home means that households had more time for home improvements and repairs so that they could make their spaces more suitable or conducive for working and studying from home. But our concern is that this behavioral shift would have front-loaded years' worth of spending for home improvements in the past 3 years. And second key risk is that competition could intensify, resulting in faster saturation of the home improvement market in the country. This is especially apparent in the face of the current high inflation environment and as Wilcon enters second and third-tier cities, which is actually the target markets of the company's closest competitor, City Hardware. And lastly, the third risk is the lagged impact of our expected slowdown in residential demand to spill over to the home improvement market. So this pertains to our outlook for the residential property segment. recovery of the primary residential market has not been strong post-COVID, and we expect soft demand for housing to persist in light of the high interest rates, unattractive rental yields, and generally weaker propensity to spend on big-ticket items given the prolonged inflation. But normalizing growth ain't a bad thing, as our title says. We are still maintaining our buy call on Wilcon with a slightly lower target price of 30.10 pesos. This assumes a higher WACC of 9.9% from 9.5% and has an implied PE of 28.6 times for 2023 and 24.6 times for 2024, which is attractive at near -1 standard deviation of historical valuations, although it's still a premium compared to peers, justifiable given Wilcon's above-average growth expectations. So, that's it for our Wilcon Company update. Thank you!
Thanks for listening to First Metro Securities Philippine Stock Market Weekly podcast. Don't forget to follow us to get first dibs on our new episodes. For more up-to-date market news and info, exclusive content, and the opportunity to connect with your fellow Filipino investors and traders, join facebook.com/groups/FirstMetroSec and be part of the FirstMetroSec family.
FirstMetroSec is providing this podcast as a general market commentary. Reference to any specific security, product, or entity do not constitute as an offer or a solicitation of an offer to buy or sell any financial instruments or to participate in any particular trading strategy. The statements, comments, views, or opinions expressed by the hosts are subject to change without notice, and FirstMetroSec is under no obligation to update, amend, change, or correct any of the statements, comments, views, or opinions expressed. The statements, comments, views, and opinions expressed by the guests are their own and do not necessarily reflect the view of FirstMetroSec. FirstMetroSec disclaims any liability arising from reliance on or reference to any information obtained in this podcast.
The views and opinions expressed by the podcast creators, hosts, and guests do not necessarily reflect the official policy and position of Podcast Network Asia, the hosts of the program, or other programs of the network. Any content provided by the people on the podcast are of their own opinion and are not intended to malign any religion, ethnic group, club, organization, company, individual, or anyone or anything.